This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, we are live
What's up,
streaming
Jonah?
again. We're streamers, Avi. We're streaming.
Back to live. It's good. I like it this way. So hopefully we can get some good comments, some good people coming in. Jonah, it's good to see you. How's
Good
your
to see
week
you
been?
too, man. It's been a good week. It's been volatile. Just watching my crypto bags erode some value, then gain some value, then puke. I'm trying not to focus too much on it. These are times when I like to pull back and try to just think about the bigger picture rather than like trying to analyze every heartbeat with my fingers on the pulse, panicking about every gap between every heartbeat in the market. I'm not that dialed in right now. Also, we had some Jewish holidays and I just turned my phone off for a couple days and then turned it back on to see Plasma, our favorite, Avi. How about that one?
Oh my god. Unbelievable. It's like they pulled off something that I thought just wasn't able to be pulled off. Just because so many people had failed at it. I think a lot of different launches. They tried so many different mechanics. You know, people have tried airdrops. People have tried points. People tried all these different mechanics to get their launch of a platform off to a good start. And Plasma kind of just nailed it. They had all of the incentives lined up. I mean, if you look at it, there's $6 billion on Aave on Plasma now because of the incentive program that they're running. I think one thing that was really exciting about Plasma is that they're in their own little world of being the stablecoin platform, and I think that provides them a lot of value just in itself, is just being something novel within crypto. And people were nervous about this lock drop that everyone was going to sell. Turned out it was massively underpriced. You know, it's like what I was talking about before when I was like, I'm super bullish. I'd like to buy if we trade down a little bit. That turned out to be a good trade. If you bought in the 65, 75 area, and even in the 80 area when I was saying, hey, like, let's wait for a pullback for a little bit, that was a great trade. Plasma is now trading 125. It's $10 billion valuation, which means that it has huge shoes to fill. But the team, by all accounts, have pulled off an extremely competent launch. I mean, you know, they've just done very well.
Yeah.
Overall, I mean, the billions of dollars on Aave itself is huge, and I think when you get momentum like this in the beginning, I mean, it's just go. I think that Plasma could easily be a $20-30 billion protocol in the next year, as long as I keep firing on all cylinders. So I'm still a holder. I'm still bullish. Things are looking good for Plasma, which is kind of interesting because the rest of the market is not looking as good.
Yeah.
You know, on the last podcast, what did we say on the last podcast, Jonah? When on the last podcast, Bitcoin was trading at around 113. It was trading about where it is here, and I said, look, I'm getting a little nervous for the market, getting a little bit cautious, specifically on the large caps like Solana and ETH, and basically everything outside of BTC. I think we both agreed, hey, maybe we could see BTC trading down to 105, but in that scenario where BTC trades to 105, alts are just going to get absolutely hammered. And then what ended up happening is Bitcoin ended up trading down to 108, which was not, and then bouncing back, which was not huge, but man, everything else got crushed. I mean, from that point, Solana went down almost 15%, ETH went down 10%. I mean, alts kind of across the board got crushed. And now we've rebounded a bit, but really just Bitcoin, and then you know, Plasma and Aster have done well in aggregate. And I guess BNB came back. BNB came back a little bit, but basically Yeah, I don't think much has changed in terms of like my general outlook for the next few months is basically just that this is still in range mode, and that alts can keep bleeding. But I don't know, Jonah, what are you thinking?
Yeah, I feel similar. I mean, let's talk about Plasma for a second. This team is just executing on all cylinders, right? So in terms of partnerships, I think they're linked up with, like, for starters, Tether and Bitfinex. I think the founders of Tether are like deeply involved in Plasma. So that's a great start. I think they have a partnership with Binance. They've got EtherFi, USDAI, like Peter Thiel's in it. This is just one of those projects that you've occasionally come across maybe once a year that's kind of anointed to succeed. And I'm overall, I'd say I'm a pretty crappy venture investor, but one thing that I'm learning from Plasma, like you and I obviously had I guess mark to market grand slam on this one, 100xer. It feels like I guess what I'm kind of learning is a framework for angel investing. If you're getting a look on something because you're like, if you're being included in a coterie because of who you are, or in our case, a podcast, or experiencing crypto or whatever, you're kind of in a lucky position and you should take those deals. Meanwhile, if you're being asked to fund a project without the right coterie, just because you're friends with somebody and they're a friend of a friend is recommending an angel investment, I tend to lose on those types of investments, because at that point, the waterfall of people who would invest in the project have already either passed or been kind of, the project's been sort of, run through, looked over, whatever you want to call it. And that's sort of anointed to lose. So this one, I feel very lucky to have been able to put money in this. It's kind of the first angel investment I've made that's looked like this. And I think it offers a good blueprint for avoiding bad angel deals. I put so much money into like angel investments over the years where I haven't had any insider reason to be part of the deal. And realistically, I was just a checking account. And here it feels different. So that could be like a starter framework for investing in these things. Now, in terms of how Plasma will succeed long run, the rise of Tron to move Tether is really important. It tells you two things. The first is that ETH is just too slow and too expensive for the world of stable coins, and L2s kind of aren't getting the job done. ETH L2s. The second thing it tells you is that the backers of Tether don't want to put all their eggs in Tron's basket. They don't want to stake the future of Tether on Tron. They want to build their own chain. And that's kind of a theme that we're seeing across all of crypto. If a product has, a real valuable reason to exist, the founders are going to build their own chain rather than just toss it on somebody else's chain. Like this didn't happen on Solana. This is happening on its own. There's going to be competition. Like there's another chain called Stable that was some early Plasma founders that peeled off out of Plasma over some disagreement, and they are launching their own chain. That one may succeed as well. Tempo, the Stripe paradigm vehicle, may succeed. I think the world can exist with multiple stablecoin chains, but ultimately, if there's like a free Tether transfer chain that's backed by Tether and Binance, that could easily become one of the world's like serious major banking systems right there. And the upside for that is maybe that was kind of the promise of Ripple when it launched back in 2013. Maybe the upside is $300 billion, which is roughly where Ripple's market cap has kind of hit recently. So there's a ton of upside for Plasma. I'm not calling for that, but you can definitely put your dough into this and feel good about it. One question I have for you, Avi, I saw some screenshots on Twitter of people 400xing their money on the Plasma launch. To me, that seems a bit spurious, because I thought Kobe's Echo.xyz thing, the pre-sale, occurred at a $500 million valuation, which would imply like a 20 to 30xer from here. Like what am I missing? Was there a way to get in at a cheaper valuation that we just missed?
On that point, I'm not 100% sure where those numbers are coming from. It's possible. To be honest, I didn't pay super close attention to the Echo sale. Like I just wasn't in it, other than noting that it sold out like extremely fast. I thought one thing that was really funny was when Kobe said, "Hey, just because this thing did really well doesn't mean angel investing is free money." He basically came out and said it's like he felt the need to say that, because I guess it's it's like lottery winner syndrome. If like somebody that you see makes a lot of money on something, you're like, oh, okay, I guess I can make a lot of money on this thing too, and then you go in not realizing that might have been luck. Although what I will say is that the Plasma team, I think, like I was saying in the beginning, they sort of did everything right. They managed to message, like, it was the right messaging to the right people. They didn't oversell too much. And the reality is that their end goal is pretty massive, Jonah, as we both know. I don't know if you saw the headline that USDT just raised, or is trying to raise 20 billion at a 500 billion valuation.
I saw that.
To raise, to even have like an active raise of $20 billion is it's not a joke. Like, you're not going to raise $20 billion just from crypto people. You're going to be raising $20 billion from a variety of different people, probably a lot of TradFi people, probably a lot of banks, and probably a lot of people that are instrumental to the systems that you're actively trying to replace. Now, the world is trending in the direction that we all get very excited about. We all got very excited about 5 or 6 years ago, which is we are now truly building the new banking system. That is currently what is happening right now, is that the idea of the parallel banking system is now actually in action, and crypto is fulfilling that. So what are the components that we need for this? We need a platform that exists outside of the banking system, right? Which we had from the beginning. We had, Ethereum, we had Solana. We've had the platforms, but we also need the outside money on these systems, and that's what's currently happening. Is that, and this is where I think Plasma can do a lot. So with Aave on Plasma for a long time, just in general, if you wanted to use Aave, what were you using it for? You were using it exclusively to borrow and sell, or borrow and lend crypto, specifically crypto. I don't know if you just saw, but Galaxy's tokenized their shares. Their shares now trade on some level as a tokenized asset. Over the next year, over the next 2 years, that tokenized asset world is going to grow and grow and grow and grow. And more of the assets that you and I and other people hold in their day-to-day portfolio are going to be tokenized, and you're going to be able to borrow against these assets on a platform like Aave. I mean, just as a personal example, this would be great because I have a brokerage account with Chase. If I want to go borrow $1 million against my portfolio, I got to call up my banker, I got to fill out a bunch of forms, and I got to borrow $1 million, even though it's over collateralized by a substantial amount. Once the majority of my assets can be represented in an easy and frictionless way on chain, I see no reason why I wouldn't just move that all on chain. Because then if I want to borrow $1 million to go buy a rental property or go do this, go do that, guess what? It's 3 clicks. And I have the money, and then I can go spend it immediately. I mean, it's really incredible. Like, the frictionless systems are being built, which is why, again, I'm super bullish on things like, and this has actually come off a lot, but Syrup has come off a lot since the highs. Super bullish on things like Syrup, super bullish on things like Aave. I mean, we're literally watching we're watching with our own eyes the new system being built, and it makes a lot of sense to try to take advantage of that.
Yeah, I agree. I mean, to be one thing on what you said if you want to borrow $1 million, you have to fill out a bunch of forms. I have the same private bank as you do, probably, and I had to fill out those forms once, and then wait a couple weeks. But now I can do it with a few clicks inside of that platform. What I can't do, so technically, I could just wire myself $1 million from my private bank on margin, collateralized by like my equity positions and ETFs and stuff. So it is pretty frictionless already there. What I will say is, let's say that my bank is overcharging, like charging a crappy interest rate, right? If I wanted to move from my bank to another bank that charges a more favorable interest rate, that's another like 6 weeks of pain and forms and whatever. And I shouldn't have to fill out forms in the first place. They have my assets. Like, why do I need to fill out paperwork? You know, they can liquidate me if they want to. It should just be a few clicks, like deposit into the, you know, the funds are already in the vault, basically their vault. So I shouldn't have to fill out paperwork. So that step could be eliminated by crypto. But then the real one is interest borrowing rates for people like you and me and everybody else who's listening will go down if there's competition. And right now, the big moat that these banks have is that once they have your assets, there's so much friction associated with pulling your assets out of their platform that they can kind of get away with charging you too much for FX transfers, over collateralized loans, mortgages, all this other stuff. That's why every day you get another piece of junk mail from, you know, Capital One or Citibank, basically trying to acquire you as a customer for a stupid price, because they know that once you're locked in, they can steal from you for, you know, decades. And that, I think, is a big unlock for crypto. And I think, you know, Plasma does offer a platform for all of that. Like, why couldn't all of this stuff occur on Plasma? And there is a pretty accretive mechanism to the XPL token. If, you know, I think for basic like USDT transfers are free, but if you wanted to structure something more more complex, like a smart contract, or a loan or some other type of over collateralized or under collateralized transaction, then I think you end up spending some XPL and burning some XPL. I forget exactly how the mechanics work, but I think that's, if the financial ecosystem gets built on top of this, there is stupid, silly upside for this project. Yeah, I don't know. I think it's super exciting, and the team gets it. They incentivize people by letting the community get in and make some money, as opposed to what seems to be going on around the world in other contexts, which is the team just dumps on the community and uses the community as exit liquidity. So this team is building for the long run. Let's talk about Aster though quickly. I put out a trade idea that I don't have the balls to put this on in size, but I still think it's a good trade, and I want to talk to you about it. Just looking at the chart voodoo, I think Aster's topped out at $2 a token. I think you're supposed to like deposit some collateral on Aster, short Aster, the token, with leverage, and then cover it lower and just generate a bunch of points for yourself by doing that, make some money on a trade. I have, you know, I wanted the side, like, I'm torn about this one. It seems like an obvious trade, but my conviction isn't high enough to like put serious capital into it. And so it's not really worth it for me yet. What do you think of that one?
I think it's a good trade personally. I mean, my initial thinking was that Aster could really rip, because it was kind of like the thing of the moment, right? And it did. From when we were talking about it, it went from 140 to a little bit over $2, and then it sort of topped out there. And then everyone's attention left because of Plasma, and Plasma did so well, and people stopped paying attention to Aster. I think that what's very clear is that this product is not as good as Hyperliquid. It's not as good as what else is out there. What it does have for it is it has at least the pseudo backing of CZ. And all of the Binance criminals around it, which always makes me very nervous. It's like I don't like to play those things from the short side. When you have somebody that can crime you and destroy your trade. That's generally not generally not good to go up against that, because I think it makes it psychologically difficult to hold on to a trade, which I think is sort of an underappreciated part of trading. Is it psychologically easy or hard to hold on to this trade? There's this great quote from a guy he used to trade the pits in Australia that I've talked to you about, the Ride the Comet guy. And what he says is, research is great, but research is a crutch. Research is there to help you, but you already know what the trade is. And what he meant by that is that, you can do a little bit of research, even a few hours, and you can get a good sense for whether something is a good trade or not. A lot of these bigger hedge funds and guys, they'll spend like 40 hours on a research report for a trade that realistically they probably could have understood in 4 hours, but they spend those 40 hours on it so that they can build a really strong foundation so that they don't get shaken out of the trade when it goes against them. That's actually a big reason for it, is so that psychologically it's like, okay, like I have faith that we really, we covered every base. Like I knew 90% of this, 90% confidence in this trade with 4 hours of research, but the 40 hours got me to 100, and that's going to keep me in the trade for a long time, even when it goes against me. And so that's kind of what I think about Asters. It's kind of hard to get to 100% on a trade like that, which makes it very easy to lose, right? Like you can imagine you short it here, and then it goes up 10, 15% against you, and you have no idea why. Like there's no reason for it to go up. You're just like, oh, am I going to get caught in a short squeeze? And then you close out. But there's no, like, you see, it's like very hard to build conviction in a trade like that. Like what's the conviction that you have? That's what I would say when you're trading in general, like always think about that. Yeah.
Yeah,
Is
I think
always
so.
think about that. And
go ahead.
no, I think it's just important to keep that psychological point, which is why I wouldn't necessarily short it. What maybe you do is you long hype short Aster. But anyway.
Yeah, I mean, I guess the risk to shorting Aster is that CZ and the crime family, like if it goes too low, they just paint the tape and make it go higher with all their money and short squeeze you. That's kind of why I'm not doing it. I mean, I think a lot of times when you debate a trade with a friend, there's a very unhealthy tendency in crypto, being the Gen Z online degen asset class that it is, to describe that debate as mid-curving it. But I think that's an unhealthy cycle to get caught in, Avi. I think that like when you analyzing trades are healthy, asking yourself, what would I do if I short this thing with 2x or 3x leverage with a sizable nut as collateral at $2, and it's trading 250, and CZ is like euphorically bidding it and posting about bidding it on Twitter? How are you going to feel? What are you going to do? Right. And in this case, because I have no framework to cling to other than looks like it's topped out at $2 based on the current level of interest, which could totally change, I'd probably trade poorly if CZ were like lifting 250s. And it wouldn't be the first time that CZ has, I don't want to accuse him of manipulating a token, but like had an impact on the price of a token. Like FTT comes to mind. These things can be influenced by sizable capital flows. These are not, we're not talking about friggin' Apple stock here. We're talking about, oh, speaking of Apple stock, I do want to shill Meta later in the podcast for a non-crypto bet. But yeah, we're talking about micro cap assets in the grander scheme of things. So I think it's much safer to get into something like Plasma in a pre-sale when the founders are like, behaving in a way that that telegraphs confidence, rather than betting with leverage on something that's super volatile. But my gut tells me that this thing is going 40% lower, and it could be a great way to farm points. Hype versus Aster is an interesting idea. I just think that Aster in its early days in the airdrop farming period could perform in a very bizarre, decorrelated way, even from Hyperliquid, just because like we observed last week, the volumes to open interest ratio is so ridiculously high on Aster and idiosyncratic that clearly what's going on is just airdrop farming. To me, Aster to me feels a lot like friend tech. There's just like a enormous amount of like a frenzy of activity when there's points to be farmed or airdrops or money. And then as soon as the incentive structure goes away, which it obviously will, it just goes back to, ghost town kind of thing.
I also think that if you look, if you want to get long CZ, just get long BNB. Like if your take is, oh, CZ's really good for this coin, guess what coin he's best for? BNB. So
Yeah.
maybe just size it up. And one of our commenters had a really good message here too, which is that the lighter TGE is coming in December. I think that's generally going to be bad for other assets in this space, because I think like really good competition. We've talked about this on prior podcasts, but the DEX trading space is just so highly competitive. And every few years, no matter how big the lead looks, it's actually not insurmountable, because it's very easy to switch over where you trade. And so I do think that maybe both Hype and Aster have a problem there, but I agree with you that Aster has a much bigger problem because they don't actually have any real usage.
I actually don't think Hype has a problem for the same reason that Plasma doesn't have a problem with the competition. There's sort of two prongs to my thesis. Prong number one is that the team is just cracked in both cases,
right.
Hype and Plasma. They are top notch, S tier. Use your way of describing them. Best of the best. The second thing is they got their community rich in both cases. Hype has minted people. Plasma has minted people. And so those communities will remain loyal because they're rich and they're gonna pump the project. And you need a community to succeed in crypto. Like just look at Bitcoin. Bitcoin's the ultimate community building asset. Even we got the Donald as part of our community now. He's a Bitcoiner. He's an influencer. It's not just like Nayib Bukele, the president of El Salvador anymore. These communities expand, they attract new influencers. That's how crypto works. It's a community incentivization and community building mechanism philosophically underneath all this other blockchain shit. That's what it really is. And like Aster is not building a community. It's a cult of personality, kind of like Launchcoin was around that Pasternak guy, except this time it's CZ. Better personality to form a cult around for sure. But this isn't a community, and the team itself. Like, I guess if CZ was like, I'm abandoning Binance entirely, I have no interest in that, not doing anything else. I'm just going to focus on beating Hyperliquid at building a perp DEX. Maybe there would be a story here, especially if they'd gotten people, like a broader group of people in at a pre-sale and were charging lower fees than Hyperliquid, but they're not, and that didn't happen. So I'm more sanguine on the long-term prospects. Also, like you said, like Lighter and all these other competitors are going to show up. The perp DEX world, I think it's going to end up looking like the centralized exchange world, where you had Binance taking like 80% of the market share, 70%, and then everybody else just like in a rock fight for the rest of it. Like we have a blueprint for how the perp DEX space is going to play out. I think Hyperliquid is the Binance of on-chain trading, and it will eat most of the pie. Whereas if you zoom out to the stablecoin space, the addressable market is like multiple hundreds of trillions larger than the market for online perp trading. And that market can support multiple participants. I guess, so that's why I think Plasma has like so much, they're just as cracked as the Hyperliquid team, but they have so much more room to fail, even though they probably won't. So that's kind of where I am on that. I guess my one question I had for you earlier that I forgot to ask is why is Tether raising money? don't they, like, they're raising 20 billion. Don't they like lose $20 billion behind the cushions of their couch on an average Wednesday? Like what are they doing? Why do they need that? Is it just like a rubber stamp that they're worth a lot?
Here's my conspiracy, and we'll see it after they actually raise and who they announce they raise it from. But my conspiracy is that they need allies, and that they make a tremendous amount of money already, that they probably don't need money to they don't need the money, but what they need is the access and the allies. And one way to do that is by letting people make money off of your product. So if you have this killer product that's minting money, and you want to go worldwide, and you let in the Saudi investment fund into your product so that they can also mint money off of your expansion, then maybe more oil gets settled in USDT at some point in the future, right? I think that's probably one of the major reasons that they're raising. It's a very smart thing to do. I think it's the right thing to do. The other thing is it's about having. I mean, their plans are pretty large, I think, for the future. Like they're
measured in centuries,
right? Like yeah, their plans are measured in centuries. They view this as like the moment. I mean, they basically have 3 more guaranteed years of expansion to the point where they can't ever be shut down. In 2028, who knows who wins? Whether it's a Republican or a Democrat is a toss-up. And so I think that they know that they have 3 more years and that's it. And that they just got to move as fast as they possibly can, get as many people on their side as they possibly can, so that they're indestructible come 2028. It might not matter. Maybe the Republican gets in charge and Tether just keeps cruising. But I think that smart people cover their bases.
Yeah, and you mentioned something that's a great tangent into the macro space. So the most important chart, in my opinion, for all risk assets, especially crypto, is the Democrat Party net favorability rating. And I forget where I saw this chart, but it's, yeah, okay, let me share it. Hold on. I'm going to try to share with the live stream here. Share screen. Chrome tab. Share. Just look at this. This is a frigging dumpster fire. So for those of you who are listening on audio, this is the Democratic Party favorability advantage. Baseline is 0, favorability over the Republicans. The chart starts in 1992 and finishes today. So they've spent most of the last 40 years above 0, meaning like people are either like kind of coin flip between them and Republicans, or, I guess at the peak, right after Obama inherited the financial crisis from George W. Bush and 2 wars and, trillions of dollars of debt and all those problems, it peaked out at like plus 37% over the Republicans. And it's only been negative twice. Once during basically the rah-rah post-September 11th era from like 2002 to 2004. And the other time is now. And to me, this chart is like tells you pretty much everything you need to know about the future, because, and I want to get your take on this, Avi. Macro-wise, I maintain the thesis, broadly speaking, that until basically a political movement stops us out of our trades, this thing is just going to continue to run, because in the current paradigm, no politician of either party has the mandate or the chutzpah to reverse, basically the tens of trillions of dollars worth of stimulus, the migration of risk from the corporate balance sheet to the United States Treasury balance sheet. Nobody can unwind that because of the financial consequences unless they have a mandate to do so. And so far, nobody's being elected with the mandate. But what's going on under the surface is that the Democratic Party, in its embrace of AOC and Zoran Mamdani, is clearly migrating towards a stance that embraces the mandate to unwind stimulus, to unwind financial gains, to redistribute wealth. And so as soon as that Democrat, like that's what the Democrat Party represents now, love it or hate it. And as soon as the favorability rating reflects that the general, normal American public loathes that stance, but given that that is now the stance of the party and the centrists have been, politically assassinated, and all that's left is like democratic socialism. If that favorability rating starts to tick up or worse yet, cross back above 0 from where it is now, then that tells you that's basically your leading indicator. That basically tells you that the American population is ready for a financial change of gargantuan consequences that would be disastrous for crypto holders, for equity holders, for risk holders. Maybe okay for gold holders, especially physical gold bar holders. But if you want to flee the country and not have your assets requisitioned, but like that's what I'm looking at, and that's how I'm thinking about it, and that's why I think we're kind of in the clear till at least 2027. What do you think?
Look, you never know. I think that's really the answer is you never know. And the reason that you never know is because things change like that. So for example, Zoran Mamdani is not by any means associated with the Democratic Party right now. Like the Democratic Party is actively working against Zoran Mamdani, and he has a tremendous amount of popularity.
Elaborate. I didn't realize that. Go into more detail.
So I mean, he's running as a Democrat, but like he has support from AOC, and that's basically it. Like no top brass in the Democrat and Bernie Sanders. Like the actual core of the Democratic Party is not supporting him at all in any meaningful way.
Didn't Bill Clinton endorse him?
They're actively not. I don't think Bill Clinton endorsed him. They're actively not helping him because they're nervous about what he represents for the party. It's very possible that you see an AOC in 2028 get out there and try to disassociate herself from the Pelosi's of the world, who I think are really the people that are getting those, like the Pelosi's, the Hakeem Jeffries, the mainstream Democrats are the reason that number is so low.
Can I just quickly?
It's not the radicals.
The two big. So he has been endorsed by Clinton. He got endorsed by Vice President Kamala Harris, New York Governor Kathy Hochul, Bernie Sanders, of course, but who cares? He would. Senator Elizabeth Warren.
Did he get endorsed by Pelosi or any other mainstream Democrats?
I
don't think so.
Let's see. Just quickly checking. Oh, I was wrong. Sorry. Bill Clinton did not, and Nancy Pelosi has not. So I was wrong. Okay. Yeah, you're right. Sorry. I'm glad we cleared that up.
But like, so I think to round up the political discussion, you never know how people identify or what happens in the next 4 years. Like, what if AOC or Elizabeth Warren comes out and they go, I'm here to I don't agree with the Democratic Party. I'm going to run as like AOC runs as an independent, and somehow that generates a lot of interest. I mean, you just never know. I think like the huge dissatisfaction with the Democratic Party is just how like useless they've been, because they've just been completely and utterly useless. But that's really good for us. I mean, going back to crypto for a second, that's really good for us. We're gonna really benefit from these next 3 years.
I was about to say
something major changes.
If AOC and Bernie branch off from the Democrats and create their own party, the second you read that, you wire your net worth to your exchange of choice and lift as much crypto as you can, because that means that the Democrats are basically going to be Ralph Nadered for 12 years. And it's going to be like full on world liberty fi Trump style bullish crypto corruption for at least a decade. I don't know. Should we have Austin roll an ad real quick? I feel like we're supposed to do that now that we're streaming. We gotta do this. Sorry guys. Austin.
But we'll be back in like 2 minutes here to talk.
We're gonna read the comments while he rolls the ad, and we're gonna try to come up with some smart content.
Yeah.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right. Well, that was you know, this is our first time doing live streaming with ads.
Yeah.
So hopefully you guys found at least some of that useful. I don't know, maybe you'll use a product or not. If not,
It's a good bathroom break too.
it's a good bathroom break. It's good to rest the voice for a little bit.
Yeah, exactly.
I've had this cough. It's been like nagging me for like 10
Wait
days.
till you have kids, Avi. When you have kids, I got 3 kids now. Well, I mean, it goes away for like 2 weeks and then it just keeps coming back, because basically what'll happen is my daughter will, like, kids are friggin' disgusting. Like, she'll go to preschool, right? She'll like take off her shoe, lick the bottom of it, then like sneeze into somebody else who will just sneeze back at her, and then it's just like,
Jonah,
and then come home.
Why are your kids licking their shoes? Or like,
I'm being
what is that-
unfair
what's
to
that
her.
saying?
It basically says she's willing to take risk, right? Like, what does it taste like? Maybe it tastes like a lollipop, maybe not. One way to find out, right? And at this point, I like, then she'll come home and like, and you know, breathe on me, and I will just get, it's never like a full cold, like the kind that you get when you're just, you know, and you're 30 years old and you only interact with adults. It's like a quarter of a cold. So I'm just constantly clearing my throat, constantly under the weather, and you know, just hoping I can make it through an entire podcast without my respiratory system breaking down. Having young kids is so brutal.
Yeah, I can't imagine. I will in a few years. I'll join you in a few years, but for now, I'm good. Anyway, what were we talking about before? What I did want to talk about, because a few people have been asking me, and it's good to share our L's, so that people realize that, you know, we're not here scamming you like other people on CT, just pretending that we win all the time, which happens with most people. We don't. This Nakamoto trade that I posted has not worked out particularly well. So Jonah and I, we talked about the buying DAT at a discount to their BTC holdings when they were down. And at the time, Nakamoto was at a discount to its holdings, but it wasn't like a massive discount. I think it was, you know, 15 to 20% discount. And that obviously has expanded a decent amount. I think Nakamoto's down like 20%, maybe 25% since we bought in, or since I bought in. And so actually there's a great post by this guy named Crypto Brandon who did a little bit of math, and I retweeted it. I went through, checked the math. it was pretty. I think it was pretty solid. Basically, what you're looking for is you want, like, I think a 30 to a 40% discount is really good, and that's kind of where it is right now at 115 with Bitcoin at 113. I pulled the trigger a little bit too early on that trade. I think I bought in at a discount that just wasn't. I was getting a little bit too excited. I made a cardinal sin of getting too excited about a trade that I had planned out in advance, and so instead of waiting for it to hit the level that I probably should have waited for it to hit, which is a 30% discount, 35% discount where it is right now, I bought in at a 15% discount, right? And so obviously now I'm down on that trade. So what I do in those situations when I lose is, but my trade is not necessarily invalidated, I just size it down. So I basically sell half of what it was to cap my loss on that trade, but to keep me in the trade, because I still don't think it's I don't think it's a terrible trade right now. I just got in a bit too early, risk probably too much capital, and so that's how I deal with those trades. Is I size them down. Where I would be invalidated on this is if let's say we spent a month below a 30% discount, I'm not super confident that we get a closing short squeeze anytime soon, because I think what actually ends up happening is that over time more DATs are going to end up in discounts. And so you probably have like an increasing supply of things that you could buy that are at a discount, which makes this one instance of a substantial discount less attractive. The other thing that I'm watching out for is that there are, and this is pertinent to you and your love for Athena. They're they're investigating DATs on improper trading. The SEC just announced this investigation, and I'm not saying I know anything 100% certainty. What I'm saying is it's very odd how all of these tokens went up and then a DAT was announced. Just very odd. And Athena was one of those tokens where, like, again, I'm not saying that anyone on the Athena team or anyone structuring the DAT or anyone did anything wrong. I'm saying that these things happen where information leaks and it can mess things up, right?
Yeah.
So I guess what I'm trying to say is that with these investigations, some of the altcoin DATs I think are probably the most at risk, because Bitcoin DATs, I mean, like, you can't really front run a Bitcoin DAT. Like, they're not going to raise enough to really move the price of Bitcoin. Even if they raise 5 billion, if Saylor, when he buys $2 billion, he like barely moves the price of Bitcoin these days. So
Yeah. I mean, my Arrow ENA trade that I got so much loathing for is like trade idea, I should say. It's up like 40% since I put it out there. I wish I'd put it on. I still have Arrow, but that's down. I should have had the ENA short. Basically, these DATs, the official headline is SEC and FINRA reach out to crypto treasury companies about leaks and unusual trading before announcements. It's so bad, Avi. The last thing you need if you're a brand new DAT is an SEC lawsuit. Those things are expensive. Like, your legal bill is going to be like 10 to 50 grand a day just maintaining that. It's so bad. And also, these DATs, they're not like it's not like Microsoft Corporation converted into an Athena DAT, and they're using revenues from sales of Microsoft Office to fund Athena purchases. These are just companies that have been spun up out of nothing. They have no revenue, and they just have a bunch of like clown shoes investors willing to buy $1 worth of Athena for $2 via a DAT instead of buying $1 of Athena for $1 on, Coinbase. So it's kind of like these things are a house of cards in the altcoin world. And I'm not talking about like MicroStrategy or strategy or whatever it's called. I'm talking about like the altcoin DATs. They will be forced to sell the altcoin, right? They'll be forced to, if the legal fees stop them out, if they get a cease and desist or a Wells notice that actually like has enough weight behind it to stop them out, they will sell tokens because they'll have no other choice to stay alive. Or maybe they'll just say, this isn't worth it. We're going to unwind this whole thing and go do something else. We've been in business for 30 seconds. We don't want to spend the next 6 years tangoing with the SEC. We may just comply and stop doing what we're doing, because for sure there's been some insider trading and front running, which is blatantly illegal. And if the Trump administration SEC is investigating a crypto project after all of the carte blanche they've handed out, like there's probably something very real behind this. So I would imagine you're going to get an altcoin DAT apocalypse, which is just, I guess it's tempting to look at Plasma outperforming the other alts and be like, no, I can make money trading altcoins. But I do think if you get a widespread altcoin sell-off, I do think that a few alt DATs blowing up could lead to a broader altcoin sell-off, just correlation-wise. I don't really see it being like just a few DATs blow up and only those tokens go down and the rest of alts roof. When money is getting lost in alts, everybody in alts kind of loses, Yeah,
I think that's fair. So, but I mean, unfortunately, that's been true with the market more recently. It's like alts have just not been doing well. What has been doing well are all of these crypto stocks. Like Galaxy's up 10% today. Hood is up 10% today, and gold has just been on an absolute tear. I mean, I'm still very, very long gold and silver and miners and everything. I mean, even the so what was really funny is like everything that I talked about on the last podcast like went up way too fast. So uranium, the rare earth minerals, gold, all this stuff is just like continuously ripped, up anywhere from like 5 to 10%. Meanwhile, crypto's sort of gone sideways, but Bitcoin's starting to look better now. I'm just looking at the chart. Whenever you get a drop like that, like that drop from 113 to 108, and then just an immediate reversal, that tends to implicate strength in the market. And so in the beginning of this, I said, hey, it looks like we might range for a bit. It's still, I still tend to hold that. And by range, I mean like 108 to 120 looks like a good range. So maybe we can get back up to that 120 level. I do think that if the market rallies here, Bitcoin is going to rally first. This is like we've actually had like a pretty good period of alt season where a lot of individual alts ran really aggressively. ETH ran really aggressively. Solana ran really aggressively. And then you had like these individual pop-offs. And now it's Bitcoin's leading the market again. Bitcoin's up more than ETH, it's up more than Solana, it's up more than XRP, it's up more than all these other alts, which to me is a sign of strength. Like that's a thumbs up. Like that's what you want to see in a strong market. So maybe maybe I'm wrong. Maybe we do run, but I think if we run, then Bitcoin, then Bitcoin's it. Bitcoin's gonna run. So I'll probably cycle back a little bit to BTC now.
I agree with that. I had an interesting idea for a crypto investment product. So basically, there are a lot of, and this ties into what you just said. There are a lot of projects out there with gigantic treasuries, hundreds of millions or billions of dollars worth of their own token. And, obviously they're bullish that token, otherwise they wouldn't have created it and held on to so much of it. But I think that it would pay for a lot of those projects to diversify. And I think that the product they should diversify into isn't just BTC. It should be a product that's mostly BTC, like basically a portfolio that ranges between 75 and 95% Bitcoin, and then the remainder is a rotation through just high quality altcoin narratives or L1 narratives, with a bit of discretion around it and the right managers. And I think that should it should outperform Bitcoin over the long run and perform with Bitcoin over the short run. And that's probably a good like treasury product to bundle together on, I don't know what maybe you could do it on a protocol really easily. And then the managers, instead of charging like 2 and 20, they should charge like 50 bips and 0, because it would just be kind of like an asset aggregation product.
I think that's a good idea. I think after this live stream, I'm gonna go call them up.
Yeah, let's do it.
And let them know.
But what do you think? So we got a couple questions in the chat here. Do you think that the 4-year cycle will end by the middle? Like, is the 4-year cycle still a real phenomenon?
I refuse to answer this question anymore, because we've answered a lot. But I think the easiest way to frame this is just go to the Bitcoin chart and look at it on the weekly. Put it in logarithmic, and look at it on the weekly. The 4-year cycle is over. Like, we've been going up in a straight line, not in a parabolic line, since the bottom of November 22nd. I mean, like, it's over, in my personal opinion.
Yeah,
this cycle looks nothing like any other cycle.
Yeah, it's different. I think this is the steady 25-year grind higher, and it would be a shame to stop out now because you think the 4 years are over and then you miss like 21 years of greatness.
I mean, the chart just looks so radically different than it. Yeah, I mean, it's like it's over, man.
Yeah, it's over. Should I shill meta before
it's just a normal asset.
Should I shill meta before the show is over? This guy meta. Yeah. Can I shill meta? Non-crypto bet?
Why?
So I got into meta around $500 a share. I'm very happy about it. This is one where you can commit big bucks. It's like Bitcoin, basically. It's something that you can get super confident in and pretty low risk to the downside. The reason why I think meta is going to take off, we're not talking like 10x returns here, but why I think it could be a kind of a 2 to a 3 bagger over the next 2 to 3 years, which is damn good for a single name stock, especially a mega cap, is twofold. I heard a really interesting Elon podcast recently where he said that if you 10x the compute for an LLM in terms of training it, it improves by 2x. So basically your curve of investment to quality is logarithmic. It's not exponential. Mm-hmm. So what that tells me is that Meta, given what they're investing, they will catch up to the bleeding edge of AI. And then they will have the biggest distribution funnel in the world for their LLM of choice. They'll probably open source it and then use it to target ads better than anybody has ever targeted ads in the history of the world. The second thing, so basically pillar number one of my thesis is that they're going to catch up on AI. They're behind right now, but it's not priced in. What's priced in is them sucking at AI. And what's not priced in is them basically being as good as ChatGPT, but free. Mm-hmm. Free to use. But then you end up just like dreaming about products because they've incepted you so cleverly and buying them, and then they get paid. The second pillar of my meta thesis is that I think there's like a 25 to 30% chance that their smart glasses become the new computing platform of the future, like the new iPhone. I don't know if you've bought yourself the iPhone 17, but it's the same. It's the same as my 13 mini. My wife got a new one. I still have my 13 mini. It does the same fucking thing. It's crazy. There's no innovation there. So if Meta, it's not my base case, right? The base case is that nothing happens with that. But like, if Meta produces a new computing platform, i.e. AR glasses that people migrate to, then they've just become the new Apple. And that's like another 3 trillion worth of market cap that you tack onto Meta, at least, if not more, plus all the AI advantages and synergies associated with that. So right now, I think Meta is getting penalized for AI and penalized for their investment in AR. They're just like, oh, Zuckerberg's on some chasing windmills, Don Quixote style. Let's penalize Meta stock for that R&D instead of giving them credit for it.
He did do this already with the metaverse stuff, right?
Yeah.
So I think that's what people are responding to.
Yeah, but that's what I think that's where I think the market is being short-sighted. I think he's being penalized for two things that that will reward investors bigly. And he's the only founder mode guy left in the Mag 7. The rest of it is just being run by basically consultants.
Well, no, except for Jensen Huang.
Oh yeah, you're right. Sorry, forgot that one.
But
you're
generally agree. Generally agree with you. Okay. All right. Well, maybe I'll go buy some Meta. I'll have to go take a look.
Basically, I have Meta instead of the allocation that I would have put in the NASDAQ ETF. I have concentrated in Meta, and I think that's smarter.
Because you think that they're going to massively outperform the NASDAQ in general. Okay.
Yeah.
I'm going to have to go look at my portfolio and do some, maybe I'll send it to you. You can be my consultant.
I'd love to debate these trades out in the open. That's what the 1000X podcast is all about. It was a great live streaming with you, man.
It's a great live streaming with you. Thank you guys for listening to us. We will be doing this every week now that we figured out how to live stream.
Hell yeah. Till next week. Austin, roll the thing where we don't get sued for our live stream, please. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.